Alright guys, thanks for tuning in this week's episode. Today we're going to go over shorting stocks. So basically what it means to short a stock is to buy a stock and hope it goes down in price in order to make money. Now this is a great way to make money in a bear market, as well as a traditional sense. When there's a bull market, you just buy the stock. So the way shorting works is, I like to give the famous phone example. So for example, let's say this brokerage has a phone and the phone is worth $100. You think in the near future the phone will be worth a lot less. You decide to tell the brokerage, hey, I want this phone. You then take the phone and you owe the brokerage firm $100. You haven't given them the $100 because you only have to give them back the phone. They don't care about the money, they just want their phone back. You then take the phone that's worth $100 and you sell it to an individual investor for $100. Now you have no phone, you have $100, but you still owe the brokerage firm a phone. You wait a period of time and the phone finally drops from $100 in value to $50 in value. You then decide to take your $100 and purchase one cell phone back from the individual investor. You now have a phone and $50, and to cover your short, all you have to do is give back the phone to the brokerage, which you do. You have now made $50. Thank you guys for watching. If you liked the video, leave a like, comment, subscribe, and comment below if you guys want me to go into more in-depth trading strategies on how to actually short stocks in real life. Thank you guys for watching. Remember to leave a like, comment, subscribe for more future content.